Happy Sunday. Hello, hello. Welcome in, everyone. Make sure the audio is good on my end. All right, everything should be loud and clear on my end. Make sure everything's good with TradingView. All right, we are good to go, guys. Hope we're all doing well. Appreciate you guys joining us here this lovely Sunday. Unicorn Queen, good Sunday. Have to catch the replay. Not a problem at all. That's why we always like to make the replay available for you guys to refer to throughout the week. And maybe you're not able to make it live. I know everyone's had different time zones, different schedules, so we keep it the recordings uploaded for your convenience. Jeff, happy Sunday to you, my man. Cleo, AT Sundays, absolutely. Jambo from Kenya, appreciate you joining. James, where's everyone tuning in from here today? Hello, hello, hi. Hello, everyone. Greetings. All right, give everyone a minute to get joined up, and we'll get right into what we're looking at here for today. One thing I did want to mention before we actually get into what I'm looking for, what opportunities I'm going to be looking for this week. I did want to let you guys know about live trading. I know I told you guys I would be doing my best to get live on YouTube with you guys for the AM session, but I just want to let you guys know, what my priorities are and why I haven't been able to make as much time for YouTube. So as you guys know, I am a full-time day trader, so my priority is number one, being a trader, right? Making money trading. And that requires a lot. For those of you guys that are reaching success, you guys know how much it takes for you guys to be successful. And for those of you guys that are still working to get to that point, you're going to realize being a successful trader requires a lot of focus, a lot of organization, and doing the little things, right? So that being priority number one. And then also that priority number one is delivering a world-class mentorship experience to those I'm working with through live coaching sessions, the core content I'm making, PDF resources, answering questions, all the above, right? So that occupies about 90% of my time. So just to let you guys know, that is why I have not been able to go live on YouTube. It's not that I don't like hanging out with you guys. I've actually been looking forward to it, but of course I've got other priorities to attend to. So hopefully you guys can understand that. I will do my best to go live one day this week if I'm able to make a session work in my schedule. And that's where we're at with that. So appreciate you guys' patience. How's the past month been for your trading? Great question. It's been very good, very good. Things are moving forward. Progress is being made. Trading is scaling with business partners, accounts I'm working with, my own live accounts, funded accounts, business is booming. Appreciate you guys asking. So with that, guys, let's go ahead and get into the business, what I'm looking for here today. We'll start with US dollar, go into bonds, and then as always, we'll finish off with the stock index futures. And then from there, I'll get into any questions you guys may have. As always, you guys generally have some amazing questions, and I'm looking forward to getting to those here as well with you guys. So with that, let's go ahead and get into the business. Lotus, hello, hello, live stream number 100, number 100 live stream, right? I've been doing this for a little while now, absolutely. So this is a bit of a special one here. All right, guys, let's go and get into it. And what we're looking for here for this week. Kevin, happy Sunday. Dylan, hope your grandma's doing well. Hope you've been doing well too. Sure have, brother. Appreciate you asking. Thank you very much, Kevin. Good to hear from you. All right, so weekly chart for US dollar. We saw another expansion last week. The draw was this low here, what we were looking for last week, sell side. Here on the weekly chart, that was delivered. Small range week. Now my attention goes to this weekly fair value gap here. That's the draw after already having dropped quite a bit. We've already also traded to a discount market from this low to this high. So it's reasonable to see the market have a short-term retracement to this weekly fair value gap in here. Once we get into that weekly fair value gap, again, the market's going to show its hand and tell us where it's going to go from there, right? So pretty straightforward. No need to try to forecast too far ahead. Just what's the next price run? And then once you get that next price run, the market's going to give you clues. If you know how to read the price charts, it's going to give you clues as to where it's likely to go next. So that's not something I really put too much of my attention and energy into. I used to a lot more, trying to focus on, okay, if we go to this weekly fair value gap, then where are we going from there? But then I learned that's such a loser's game because that doesn't make me any money. What does make me money is what's that next price run? Once we get that price run, then you have to get a feel for the lay of the land. How did we get there? What signatures is the market giving us now that we are trading at that key level? And then I can focus on the next price run after that. But trying to focus on where we're going 2-3 months ahead, 3 to 4 price runs forward, in my opinion, is a loser's game because it's not making you any money. So I like to focus on what that next price run is. From there, the market's going to give me insights, tip its hand. And like I said, if you know how to read the price charts, the market's going to reveal to you what it's likely to do from these key levels. So working down to the daily chart here, Let's take off that weekly gap here. Huge acceleration to the downside. And like I said, they cleared out that sell side here we were looking for. And now the market's pulled back up into the range here. So what I want to see is, do they want to take the market up into this fair value gap here? And then how we trade there, I'll have to get a feel for where we're at once we trade into this price range. Abraham, my man, happy Sunday, brother. Looking at this fair value gap here. So once we trade up into that, then like I said, I'll get a feel for how we trade at these levels. So I want to see, can we remain above this down close candle here? If we can remain above 50% here at this down close, kind of like we're seeing here, you see Friday open, made the low there inside that 50% of that candle. I want to see if we can stay above 50%, and then that would give us a nice price run into that daily fair value gap. Then from there, again, market's going to tip its hand, tell us what it's going to do from that level. But as of right now, that's my main focus. Whether we trade here and continue, or whether we see an all-out reversal and continue higher, like I said, I'll have to get that information once we get into this daily fair value gap. Hourly candle here, watching this imbalance here. This is going to give me direction short-term Monday going into Tuesday. So if we start to show strength through this fair value gap, I'd like to see us get above it, see it be used as an inversion fair value gap here, meaning we get above it, use it as support, and launch higher. And then again, we have that weekly imbalance here. We've already dropped a lot, like now zooming out, right? We've already dropped a lot on this price leg here. And what have we not seen recently? A run on buy side. So in my mind here, these smooth highs here, and here would likely be on the agenda. Even if we're going to continue lower, it's reasonable to see the market retrace. But again, we have to have the market confirm it inside of this key imbalance here. All right, moving on to the bond market. Let's go up to the weekly chart here. So we're seeing heaviness in the bond market. We were predicting this from last week because we saw the market sweep buy side here, right? So we had a buy side liquidity run here and here. And like I said, that also took us to a premium of the dealing range here, right? So from this high to this low, equilibrium's right here. And this buy side is just at equilibrium. Buy side taken in a premium market, and then the market is rejecting. So next draw for me is the weekly fair value gap for bonds here. So weekly fair value gap, looking for that as the next draw. And then the confirmation that we discussed last week was the S&T divergence, right? So we did not get a higher high on the bond triad. Whereas these two did take out buy side here and here. We did not get that buy side run there. So the proper context, again, S&T, very, very powerful. Daily chart, short-term bias here, looking at this low to this high. Equilibrium price point is here. This wick here, we traded up into it. Market staying in the lower half. Bearish up close candle, as long as we respect that. The draw is this fair value gap, and more specifically the equilibrium price point, looking for a short-term discount market. From there, that's what I'm looking at in the bond market. For right now, we have seen decoupled dollar and bonds. Generally, when we see lower dollar, we see higher bonds. However, we've been seeing dollar dropping along with the bond market, right? So very interesting markets, and we have NASDAQ dropping as well, right? So crazy times. So we've been calling dollar lower, right? So we've called discount targets on dollar last week, those delivered. And we called discount targets on NASDAQ last week as well, which also delivered, right? So I know generally you guys are used to the markets moving in a more symmetrical way, right? NASDAQ lower, dollar higher, or vice versa, dollar lower, NASDAQ higher. But we have to take what the market's giving us, right? So while fundamentals are very helpful, right? And this is fundamental analysis using interest rates, the bond market, the currency market with the dollar, and then using that to confirm what we're seeing in the stock market, right? So that's fundamental analysis using the charts. However, what's going to be king above all of that is price action. So even though the dollar is trading lower, trading in the discount targets, that sell side that we called last week, nicely delivered, NASDAQ is also expanding to the downside. How did we know that? Because I'm cutting out the noise and I'm just looking at the price action. And the price action is telling me NASDAQ is going lower, it's bearish. So that's going to be king above all else. Fundamentals, what the jokers on CNBC are saying, right? That's going to be all below price action, right? So you want to be able to read price charts, and then you don't have to worry about anything else, right? Because the market's going to tell you where it's going to go. So I just wanted to bring that distinction because I know you guys are used to the intermarket analysis usually being dead on, right? Dollar higher, indices lower. And for a long time, we did have that. Right now, I don't have that. Don't have that market symmetry in the markets to lean on. So What do I do in those instances? I just covered that. I cut through all the noise, go right into the price action. The market's going to tell you where it's going to go. Again, if you know how to pick up on the signatures that the price charts are giving you. So weekly chart, we had a bearish expansion to the downside. And most of that was actually delivered on Monday. But we have this big down close candle. Now we're staying above 50% of it. What I'm seeing here, we've seen 1, 2, 3, 4 consecutive weeks of downside on NASDAQ. So after 4 consecutive expansion weeks, it's reasonable to see the market retrace. Now, I'm not trying to call a bottom, but it is reasonable to see a market retrace after seeing such an aggressive drop like this. So my attention early in the week is going to be focused on this weekly fair value gap here. It's reasonable to see the market trade up into that gap. And based off where we close, as long as we don't get a crazy gap opening, that still gives us about 500 points of range to work with. So once we get into that weekly fair value gap, then I'm going to assess how we trade there, right? Do we start to show bearish market structure and order flow inside that? Or does the market stay very bullish, right? And then trade up through that with bullish signatures, breakaway gaps, displacing through highs. And then if we see that, then my attention would go to this fair value gap up here. But like I said, my focus is where the money's at. And the money is on the next price run, not trying to forecast 3 to 4 price runs ahead. So right now, weekly fair value gap is the draw. And I'll show you guys what I'm looking at in the daily time frame to confirm that. And one thing I actually want to clarify as well, just because I'm calling higher prices short term, that does not mean I'm calling an ultimate bottom, right? Because the market can just retrace, trade to fair value, and continue its downward trajectory, right? So I'm not calling a bottom. I'm just saying with so much downside, it's reasonable to see the market retrace for a short-term premium. All right, zooming into the daily chart here. Here we have that weekly fair value gap. So the daily fair value gap here that we gave as the downside target, the market just fell out of bed on Monday, and then we consolidated inside that range Tuesday through Friday. This can be particularly difficult, especially if you're not expecting the consolidation price delivery. I'll go into the hourly chart and what indicated to me we were seeing that consolidation, but we did see a consolidation inside that gap. What my attention goes to is the bodies here. We do see the bodies being respected inside this gap here. So as long as you remain above this down close candle here, right? So this down close, as long as you remain above that, my focus is for the market to trade up into this weekly imbalance here. To do that, we'd also have to get through this fair value gap here with the 2 black lines. I would want to see the market get above it, use that as support, and then that would give a nice price run into the weekly fair value gap. If we lose this down close candle here, right? So this down close, what I'm expecting to act as a bullish order block early in the week. If we lose that to the downside, then my attention goes to this sell side liquidity pool there, sell side here, and then potentially as far as the body of this candle here. However, that's assuming we lose this down close candle here. As long as we remain above it, my focus is on a retracement to this weekly fair value gap in here. All right, hourly chart, confirming it in the lower time frame. We saw SMT divergence with the S&P on Thursday. So here ES made a lower low. NASDAQ did not, right? So we do have a short-term SMT divergence here. So as long as the S&P holds, we remain above that daily order block as I was covering, and we see speed through this high, right? So this high is going to be very important, how we trade through that, right? I would not want to see the market kind of like we did here, right? Trade above the high and break down and dive back into the range, right? That's bearish. That's more of like a turtle soup reversal. I would want to see the market displace through the high here, right? Kind of like this low here. See how we just completely melt on down through it? That's the same thing I'd want to see above this high here. So again, as long as you're made above the daily down close candle and we show strength through this fair value gap here, my attention goes to the weekly fair value gap. What told me we were in a consolidation here? After Wednesday's trading, seeing the market failing to break down and accelerate, we started seeing all this overlapping price action. That's a high resistance liquidity run on the hourly chart. So when I saw those indications, that immediately made me size down, manage risk better, and just be very tight with my expectations and my risk management, right? So when the market's in a consolidation like this, it's something you want to be aware of. You don't want to be aware of it after the fact, once it does some damage to your account, because these consolidation profiles are tradable. However, you just want to be mindful that it is consolidating, so you're not looking for home runs on every trade. You're getting in, paying the trader, right? So there's a huge advantage to understanding what market profile that we're trading in. And of course, that's something we picked up before Thursday's AM session, and we were able to use that information accordingly. Very successful trading week, even in this slop here. Still able to take it to the bank. Again, if you know what you're looking for, there's always price runs that are forming in the market for you to capitalize on. The number one thing you have to focus on as someone that aspires to get to that level is learning how to read price action. Once you know how to read price action, a whole new world of opportunities open up to you, because you're going to see every single day, every single session, it's just price run after price run that you're able to capitalize on as your skill set of reading price action grows. So with that, that's everything I had for the usual business. Let me go to crude oil, see what we got going on there. So bearish bias from crude oil all the way from the 73s has been dead on, looking for sell side here, and the market's been gravitating to that. Failed to get through it. A lot of back and forth here, and we covered why that is, because we're trading through all this back and forth here. That's a balanced price range, and it's going to be difficult for the market to trade through that. So it's going to be a lot of back and forth as it's working down into that sell side. The draw is still sell side as long as we remain below this up close candle here in this fair value gap. I still suspect they're going to want to take it into the equal lows sell side liquidity. And looking at the weekly chart, yeah, so the draw sell side here for crude oil. And I did want to take a look at gold. Gold absolutely mooning, $3,000 an ounce. Beautiful. So higher time frame for gold. Looking for higher prices, right? One of the things we frequently discuss, when a market is at all-time highs, you don't want to try to call a top, right? You want to continue trading in that direction, because it's going to be very difficult calling a top in a market that's just grinding higher. So when markets are at all-time highs, save yourself a lot of heartache, a lot of stress, stay focused on buy models. Of course, even within a market that's showing bullish order flow on a daily, weekly chart, there's still going to be short-term retracements, right? So you still have to know how to read price action on the lower time frame, so you're not just randomly buying every single day. But for the most part, if a market's trading at all-time highs, you want to focus on buy models. It's going to save you a lot of stress, a lot of heartache in trying to swim against that tide of higher time frame institutional order flow. So nice delivery on gold on the higher time frame, equal highs here, fair value gap. As long as you remain above that, we're going to continue seeing gold blast off into the stratosphere. All right, let's touch on oil, gold, dollar. Not really seeing anything in the commodity markets right now. Probably will be this year for sure, but as of right now, not a whole lot of interest. So any questions from you guys before we get going? Hey Dylan, can you take a look at YM? Yes, sir. Absolutely. Let's take a look at the Dow. So Dow's been cratering. Again, we've had a bearish bias for index futures. So even though I may not look at the Dow particularly, I know a lot of you guys do trade the Dow, but if I'm calling S&P and NASDAQ lower, then you can automatically assume Dow is bearish as well. But looking at this market in particular, because obviously there's going to be different targets, we have sell side here that was nicely delivered on the Dow, as well as sell side here. So we do have these equal lows here if we continue to accelerate to the downside. For the Dow right now, everything is bearish, right? Same thing with NASDAQ, everything's bearish. I think it's reasonable to see a retrace into that hourly gap, or sorry, that weekly gap, but if we can't do it, then this market is extremely bearish. I still think the Dow is very heavy. We have these equal lows down here. We have this fair value gap, market traded into it, selling off. So we have an extremely heavy market. Daily chart. Let me actually. We have this breaker block here, or mitigation block. Both work. Let's make that red. So this down close candle here, I'll be watching that. On the weekly chart, as long as you remain below this mitigation block here, we're going much lower on the Dow. Looking at the daily chart now to refine that even further. If we see a swing low and we see the market respect this down close candle here, so we do have a swing low. If the market respects this down close, then we can see the market trade up into that weekly mitigation block in here. And that's what I'll be looking for. And then we also have that daily fair value gap, this small gap in here. That'll be a likely draw for the Dow as long as the market stays above this down close here. If we get below that down close, then again, the targets I gave on the weekly chart, sell side here, will be likely in the crosshairs. All right, yeah, so that's the business there on the Dow. Tesla getting pummeled. Sell side down here for Tesla and all the way down here as well. Nice market maker sell model. All right, slim trading. We have inverted the weekly fair value gap on NQ. Which fair value gap we talking about? Let me see. Which fair value gap? I refer to this one here on September 16th. Yeah. Okay, gotcha. Yeah, so this imbalance here. Yeah. Right, and when the market is bearish, right, which is what we were looking for last week as well, we don't expect these discount arrays to support the market higher, right? So gap theory, if the market's above a gap, we want to see it get below it, resistance, sell off. So this gap here that was used as a bullish fair value gap to accumulate new long positions to send price higher, that's expected in a buy program or when institutional order flows bullish. But of course, when the market is bearish, we expect these levels to fail, right? So I see a lot of jokers online trying to take shots at ICT saying his levels are always failing, but no, they're delivering exactly as they're supposed to, right? If the market's bullish, it's going to use these gaps as support. If it's bearish, it's not going to use the gaps as support. It's going to use them as an inversion gap. So absolutely, Slim, looking at the same thing. Covered the Dow for you, Brown. MJ, we have a bullish fair value gap in NASDAQ. Do you expect price to retrace to that, then going higher? I don't know if you guys can hear that dog barking. I had no idea these dogs bark so much until after I bought the dog. not that I would ever give the dog back, but damn, this dog barks a lot. All right, so 4-hour chart. Let me share. All right, what are you asking? Weekly or 4-hour fair value gap? I don't see any imbalance on the 4-hour chart here, unless I'm missing something. Maybe my eyes are failing me right now, but I don't see any 4-hour fair value gap. Alessandro, once you said that London open is 2 to 2:30 and London macro 3:30 a.m. Eastern, does it shift 1 hour since the US shifted in daylight savings? Alessandro, that's a great question. The easiest way to eliminate all confusion as it relates to time is the markets always, as we know, run on New York local time, right? So New York local time is what all of these markets are going to run off of. So what you want to do to make sure you're in sync with the algo, click time zone here. Always make sure your time is set to New York local time, and the times are always going to be consistent. The confusion comes in if we then try to do it to our local time and then try to say, okay, well, I'm used, for example, my time zone here, we don't have daylight savings where I live, right? So we are on New York local time, but we shift once the time springs forward an hour. So what I do to eliminate all confusion, I'm not trying to calculate it in my local time. I just always have a clock around me that is set to New York local time, and it eliminates all confusion. So the times always remain the same. All you need to do is understand what time is it New York local time, and it removes all confusion. Yeah, great question, Alessandro. Wasim, it is interesting that ES took the 4-hour intermediate term high, making a market structure shift below 50% of the monthly range. Yeah. Alessandro, thank you, sir. Yeah, great question. MJ, sorry, it's on S&P. Okay, this gap here, I see what you're saying. So yeah, it'd be reasonable to see the market trade in that gap. We wouldn't want to see the market lose the gap in these two down close candles. So for S&P, we'd want to see these two down close candles support price as well as the fair value gap. So it can dip down into that. Yeah, that's reasonable. But we do not want to see the market lose this gap and the down close candles. If we lose that, then we're going much, much lower. Looking at the weekly chart here for S&P. We have that weekly fair value gap. That's the same one I'm looking at in the NASDAQ there. So that's a reasonable short-term retracement for the ES. They did leave these equal lows here. So I do still believe there's unfinished business down here, just because it's criminal for them to leave these sell stops here. So I suspect that they're still going to want to reprice it down into the sell stops. But again, like I said, because we've already dropped so much, it also at the same time is reasonable to see the market retrace, right? So what you're going to want to watch on the S&P is the same things that we covered on NASDAQ, right? This down close candle here, we want to see the market remain above that. And this fair value gap here, we want to see the market trade through it. If the market does the opposite, right, which is respect this fair value gap and trade through this down close, and we start to see the market rotate down through that, then that allows me to pivot and be flexible, right? Like I've told you guys in the past, in trading, in the investing world, being right or wrong doesn't mean shit. It's all about, can you be flexible? Can you take what the market's giving you, frame price runs, and make money, right? So it's not about me coming back here at the end of the week and the market saying, well, look, it did what I said. It's about, these are the key levels I'm using, and the market's going to give me insight at these key levels that tell me where the market should go, right? And then from there, I'm able to frame price runs and take it to the bank, right? But it's not about right or wrong. It's about seeing what information is the market giving you, and what I'm lending you guys here is the key levels I'm using to make those determinations when I'm making my own trades during the week. Yeah, no fair value gap on NASDAQ, just S&P, yeah. You had the regular trading hours price, yeah, no worries. Alessandro, so the answer is no, it doesn't shift 1 hour. London open range is always 2 to 2:30. Just want to make sure I got it right. Correct. Yeah, nothing changes. Everything stays on New York local time. New York local time does shift 1 hour, but as long as you're on New York local time, the kill zones, the macro windows, nothing changes. It's all consistent all year round. Silk Touch, thank you very much for all this knowledge. Appreciate you guys joining, and your guys' feedback is very helpful to me. Really appreciate it. Quick question. If you had no time to trade New York or London session due to work and sleep schedule, would you rather scalp based on the higher time frame bias or just swing FX and metals using all this knowledge? Really good question. Really good question. I have to think about that one for a minute. So if I couldn't trade New York or London, are you able to have an hour? Right. So can you trade for an hour a day? Like, can you sit down in front of your desk for 1 hour, zero distractions? That changes my answer, because all I need is an hour a day and I can run up accounts like crazy just with 60 minutes of trading. If I can get 60 minutes of trading, then I wouldn't worry about the higher time frame. I just scalp. Yep, 2 to 3 even. Oh man, you're set then. Well, it also depends on the personality, right? I've coached traders that are very successful higher time frame traders. Some like to scalp, some don't, right? Some like to take entries on the 5 minute, the 15 minute, right? So one of the things that's a huge consideration is your personality as well. So just because with me, I can just have 60 minutes a day and make all I need from the markets. That may not work for someone else because of the nature of that trading, right? All I need is just quick price runs. Once I can see where the market's going, I get a low risk entry. I'm able to get paid quickly throughout the day with lots of setups and velocity in my equity. So for me, if I can just have 60 minutes and 2 to 3 hours is more than enough to focus during the day. And you have sessions you can trade. There's the pre-market session, right? 7 to 9:30. You can trade 9:30 to 11 o'clock. 11:30 to 1:30, there's a lunch macro you can trade. And then you have the PM session silver bullet, right? You have the PM session that starts at 1:30, then you have the PM silver bullet that is from 2 to 3 o'clock. And then you have the last hour of trading 3 to 4 o'clock. So each one of those hours of the day, you can go in and take something out of the market if you understand time and price at a high level, right? Because the market behaves in specific ways at certain times of the day. So there's certain characteristics that the market will do at these specific times, and it gives you an edge that is razor sharp and extremely high probability if you understand time and price and how the daily ranges are delivered to us. So with all that in mind, yeah, with 2 to 3 hours, I would absolutely focus on intraday trading. But like I said, that is my personality. I'm able to make quick decisions. I see a lot of setups throughout the day. Just like you guys see when I make the live trading clips available for you guys, I'm constantly calling price runs up and down all day long because it's really easy to do once you can read the price charts. So I would recommend intraday trading if you're able to, but if it doesn't align with your personality, then you can still trade metals, you can trade currencies, and you can do it on the higher time frame. Absolutely. Daniel, how can we expect the low and high of the week? Can you expand on that? That's a great question, Daniel. That is a great question. That would take me a few hours to answer because there's a lot of things you have to consider, right? Like let's go to NASDAQ last week, for example. First, you have to know the bias, right? So before you can even know the high or low of the week, you have to know where the market's going, number one. Of course, that's pretty obvious, but you'd be surprised. So before we can even frame high or low of the week, we have to know the bias. So since last week, the bias is what? I'm lending this to you guys for free here on YouTube. The bias is what? Bearish. So now once we know that the bias is bearish, we're looking for lower prices on the week. Now we have to use the key levels that were given once we opened on Sunday. Sunday, we opened with what? A gap down, and then we displaced away from it. So what I was measuring on Sunday going into Monday is then the market traded higher into this new week opening gap here, right? And then you'll notice the market couldn't even reach the midpoint of that new week opening gap, and it left it open. So what's that signaling? The market's really bearish. So since I'm already bearish, I want to see a high of the week form at a key level, and the market's signaling it's extremely weak by not being able to fill that gap. And then we break down, leave this gap here. This is another breakaway gap here. And then the market melts through this low. So once I'm able to bring those factors together in my analysis, then it's fairly easy to assume that, okay, this is probably the high of the week. So you have to blend factors together, understand institutional order flow, understand the higher time frame bias, and then from there you're able to use time and price to frame when the high or the low of the week should form. Yeah, great question, Daniel. Silk, I love scalping from my very beginning. Well, if you like scalping, yeah, then 2 to 3 hours is more than enough to do that. Because think about scalping, what that is, right? You just need to know where the hourly candle is going or the 15-minute candle is going. If you can frame a draw on liquidity on the hourly or the 15-minute chart, and you can do that a lot of times because there's a lot of 15-minute candles, right? So you're able to use that information to take down lots of setups as a scalper. Cleo, like and subscribe to show support. AT fam, absolutely. Yeah, if you guys got value in this and if it was helpful to you guys, please do hit the like button on the way out. Helps me out greatly. Silk, you solved one of my greatest enigmas, my friend. We'll go back and forward test it. Awesome, Silk. Best of luck with that, and any updates, let us know. Excited to hear about your progress. Would you include quarterly theory on it? Haha. I think by the haha, you know my answer. Personally, it's not something that I use, but if it works for you guys, hey, if you're making money, that's all that matters. Personally, I haven't studied quarterly theory. It's not anything I've used. I do know some individuals that use it, and hey, if you're making money, then that's awesome. Adam, hey bro, I'd love to see how you manage your trades and psychology during New York session. Awesome. If you check out our YouTube videos, videos or clips from the live coaching sessions that I'm doing live with my mentorship group, you can see those on YouTube. So we actually make that resource available. Also, in the free Discord, we have an education channel where we many times do share clips and the most important lessons from that day that I'm giving to those that I'm coaching. So you guys can have access to that, and then you can get some insights as to how I'm managing trades, how I manage psychology, all the above. You can see that with our YouTube videos that we upload that my team puts together, as well as in the free Discord on the education channel. You guys can check that out. And every single day, we're giving value in the education channel to help out even those that don't work with us directly, because we know, again, many of you guys either don't need it because you know exactly what you're doing, you know where you want to go, and you're on the right path to become profitable. That's awesome. Or many of you guys may not be able to invest in yourselves, and that's also not a problem. We're doing our best to also give free education as well, as best as we can. So you can check out those two resources, and you can get some more insight into how I'm managing my specific trades and as well as my psychology. Awesome, folks. Great questions here today. Anything else for me before we get going? Cleo, Adam, all his recent live trading YouTube videos are gold. They've been super helpful with my own analysis, along with their free Discord. Really appreciate the feedback, Cleo. Thank you very much. Awesome, folks. Don't see any more questions, so that should be it for me. Anything else before we get going? Reaper got here late. No worries, recording will always be available. Bitcoin, yeah, let's take a look. I was surprised no one asked about Bitcoin. All right, let's take a look at Bitcoin. All right, so Ethereum, absolutely dumping. So we'll start with Ethereum here. So again, we've been bearish on cryptocurrencies. So Ethereum punching through that sell side liquidity that we were looking for here at the 2,100 range. Next draw for Ethereum, we have 1,500 for Ethereum. And then all the way through that, we could see Ethereum back into the 900. So we can get below 4 digits on Ethereum. Nice market maker sell model here. So looking for lower prices on Ethereum. Looking at Bitcoin, the key for Bitcoin this week is going to be watching this inversion fair value gap here and how we trade there. If we're going to be bearish, I like how we traded up into it, staying in the lower half. So we'd want to see the market stay in the lower half to continue weak. Daily chart, we have this daily fair value gap right here. As long as we remain below that, we're going much lower on Bitcoin. So sell side here, and we could see it back down to 75K a coin. And taking a look at XRP. XRP equal lows, I think we'll be seeing XRP back under $2. So that's the business for cryptocurrency. Looking for lower prices. Order flow still bearish, not trying to fight this trend. And we're still looking for lower prices. So for those of you guys that are trading crypto, investing in crypto, we're keeping you on the right side of all these markets. Kevin, it's interesting how crypto is dropping with the dollar. That is very interesting. I'm glad you brought that up, Kevin. Absolutely. And that's one of the crazy things about the recent market conditions that I covered at the beginning of the stream, which is we have the dollar trading lower, bonds trading lower, indices trading lower, crypto trading lower. Very crazy times. One of the things that helps me still keep my head on straight and know where I want to see the market going, you guys know we've been, even from up here when we were in the 95s, I told you guys this was a sucker's rally here to sucker people in long. And all it's doing is trading to a short-term premium with this dealing range high to low. Smart money is accumulating more shorts here, and they sunk it lower, right? So one of the things that's helpful, right, when intermarket analysis isn't clear, maybe the fundamentals aren't clear, is just looking at the price charts. What's price action telling you? Order flow's been bearish. We've been calling it lower. It's been delivering. And even though the dollar's been trading lower as well, price action is always king. So even though these other tools are helpful, right, like it'd be easy for Bitcoin to drop if dollar was rallying, but we're still able to see it's dropping because we know how to read price action. Just came to say hi and see the recording. Appreciate you joining, Reaper. I see Bitcoin going down to 60K. Let me see what's a 60K. Yeah, I can see that. Yeah, sell side here. Yeah, I can see Bitcoin going down into the below 40,000. Yeah, I think we got a lot of downside coming from for Bitcoin. Jeff, hey Dylan, do you use your crypto over the weekend to gauge how NQ will open Sunday night? Not really. It's something in the back of my mind. It's like, for example, if like crypto's ripping, then I can assume we're going to open with a gap higher. But one of the things that I never put too much thought into is where we're going to open. It's always a variable in my mind. So it's easier for me to see where they open. And then from there, now that gives me data points to work with if I'm going to be trading the Asian session on Sunday night or for the rest of the week. But it's not something I put too much thought into because I realize it's very difficult to predict where they're going to decide they want to open up these markets on Sunday. So it's not something I invest a whole lot of thought into. But I have seen that correlation, though, as you mentioned. Like if, for example, it's just a bloodbath over the weekend with cryptocurrency, then you could probably assume we're going to gap down on indices. So it's something I have seen, but it's not anything I put too much focus on. Richard, always putting out good stuff. Appreciate you, brother. Thank you very much. Much more coming. I'm going to get much more active on the YouTube with videos, helping you guys out for traders like you guys that are looking to get consistent, make resources available for you guys to teach you guys how to get from where you're at to where you want to get to, the process, go into detail as to how to learn how to read price action, learn how to find a model. I'm going to show you guys how to build a trading plan, and I'm also going to go into a deep dive as to how you guys should be journaling, reviewing trades, and all information that I'm going to be making available for you guys. I know a lot of you guys are very serious traders who want to make this work. You actually want to do it, not just copy trades and all the nonsense. You actually want to make this a real income stream for you guys. So I'm going to be putting out content for those of you guys that want to turn this into an income stream, want to turn this into a business for yourself. Jeff, thanks, Dylan. Appreciate you. As always, my man, appreciate you as well, brother. Alrighty, guys. I don't see any more questions here. Alrighty, folks. Appreciate you guys joining us here today. Have a safe rest of your week. I will do my best to come on YouTube here this week. If I'm not able to, then you guys understand why. So with that in mind, guys, have a safe rest of your week. Take care, and good luck, and good trading. Take care, everyone. Thank you, Ann. Take care.